Good evening, everyone. Time for another silver update. This is a 10-minute chart of silver provided by netdenia.com. You can click on the link below. I've drawn an increasing volume trend line here based on the recent interest rate announcement, coordinated interest rate announcement. We're going to talk about that when we deal with some more of the critics. And then today's number, which was the unemployment figure. You can see we had a big rally, which was met by even higher selling, and we turned around and went down nearly $1, about almost 90 cents. So again, silver is one of the most volatile of the commodities. It's not surprising because they want it to be volatile, and we're going to get into that as well when we talk about conspiracy theory and silver, etc. But so you can see that initially we rallied here from about 27.40 to about 27.80, about a 40-cent rally or so on the announcement of this number. Now, the initial impression may have been, oh, the number's so bad, they're going to have to print money again. And then the secondary reaction is, no, they're not going to do anything, so we're going to sell it off. And really all that is just a charade, because it's not, if you think about it logically, why would the price of silver fluctuate so dramatically based on these numbers, such as an interest rate cut here or a unemployment figure here? So really these announcements are just excuses for the manipulators to come in and do their manipulations. And we're going to talk about that when we deal with the critics. But before I do that, I've had a lot of people comment that I shouldn't answer the critics, or I shouldn't deal with the shills or the trolls or the rest of those people. But it's somewhat of a quandary, and I wanted to talk about the reasons for that real quickly. And the best way to do that is going to be to quote the wisest man who's ever lived in the history of the world, and that's going to be Solomon. So we're going to look at a quote here, and you'll see how it's relevant. This is actually from Proverbs 26, and this is where Solomon is dealing with this very issue here. If you think about this, and you're really going to need to think about it for a long time to understand what he's talking about. It's very, very deep, but I'll just read the proverb here. And this is Proverbs 26, 4 and 5. Answer not a fool according to his folly, lest thou also be like unto him. Verse 5, answer a fool according to his folly, lest he be wise in his own conceit. So this is actually a very controversial couple of verses, and very examined and hard to understand, but really it's pretty simple. The ultimate summary of this is going to be that you can't win when you're trying to answer a fool, because if you allow him to say what he's going to say without an answer, then he's going to be wise in his own conceit. But then again, if you answer him according to the way that he speaks, you could become like him. And that's the sort of fighting fire with fire dilemma, that there's a chance that you could actually become the enemy that you're fighting. So very, very profound. I think you could probably spend a couple of weeks thinking about how profound these thoughts are. But this is going to be the issue we're dealing with, and this is why I'm going to answer one of my critics who has posted a YouTube video about one of my recent videos. So let's go ahead and go to that video. Then we're going to talk about conspiracies a little bit. We're going to talk about shows. We're going to talk about manipulation of the markets. So this is Dick Stoyevsky. I don't know why. I don't know why these guys do what they do. They're generally crass and crude, and they all We'll look at the comments later, but they all seem to fit in together. But let's examine the substance of the criticism to start with here.
Let's see what Brother John F. has to say. Or Sister John F., but I'm not going to go there. Although I think it is damn hilarious. But let's.
So you can see the crudeness, and they're all that crude. I don't really know why they're like that, but I'm not going to answer them according to their folly, because I certainly don't want to become like them.
Start with his stuff. I'm going to leave it for a minute 30.
Silver update. This is the Euro US dollar cross, and that's laid over the silver chart provided by Netania.com. You can click on the link below. We're on the 15-minute chart. You can see here in the price of silver.
Now he's going to draw his little lines
Drifting higher.
that don't really mean
We were
anything in
drifting
the
lower,
grand context of the
Euro,
2 to 3 month charts.
whereas the price of silver was going higher, getting ready to do a breakout, and then
Okay, getting ready to do a breakout. Really? Okay. Let's go to the charts here. This is the euro, by the way, which we'll also have to talk about. Let's go to the SLV.
Okay, so he's going to take you to an SLV chart, which is, I have no idea why the guy's going to use an SLV chart. First of all, an enormous amount of data is lost because the thing doesn't trade in off hours. So as you'll see as we play on, you're going to have these huge gaps. But he's saying that he doesn't understand why I'm talking about it as a breakout. So let's go and look at a chart that I've done here that is, if he had watched the videos that I had been doing for the last few days, I had been doing a downtrend line. So when you're talking about support and resistance, you have support and resistance, which is a straight across line. That's always based upon price. So this line here is a straight up support and resistance line, and it's always going to be a flat line. Now this line here is a trend line. So the breakout I was talking about was right here, which is labeled here, coordinated interest rate cut, and you can see that cut was announced exactly at the point. You can see we actually broke through this trend line, and immediately they announced that cut, and then the market turned lower. So let's go back to the video.
This is the 2 month chart. As you can see, look at all these points of resistance here. 28, 28, 28, 29. Let's go to a 6 month. Look, let's see. Look, 29, 28 and a half. Oh wait, this is SLV, so it's minus $1, by the way. But look at all this stuff. 29, 28, 28, 28, 28. And he thinks this time, this was the time silver was going to break out. Break out of what? $35? 36? You tell me, Brother John F. Come on.
Breakout of the trend line, not the support line.
Look, I was literally, and the rest of the market was about to do the same thing. I was hoping and praying it would get to this $29 point. Look, this would be $28.5. I was praying it would get to this $29.5 point, because I was going to short the share of it, because it never breaks through 29. It hasn't done that. It hasn't broken through 30 in a good 3 months. And you think that this time, just because you say so, it was going to break out? I don't even know, but anyway, let's just go on here. He thought it was going to break through a freaking quadruple or triple resistance, just because he said so. Alright, now let's go back to Brother John F.
of course, then this news announcement came out of this coordinated interest rate cut. And you can see the story here. 3 central banks take action in sign of alarm. Beijing, Frankfurt, China, the Eurozone, and Britain will loosen monetary policy in the space of less than an hour on Thursday, signaling a growing level of alarm about the world economy, although suggestions of coordinated action were played down. If you believe that, I got a bridge I'd like to sell you.
Okay, so first off, the Chinese aren't even friends with the Europeans. They fucking hate each other. They do not coordinate over anything.
Again, note the crude language and demeanor of this person.
In fact, Europe and the US calls them currency manipulators. They are not friends whatsoever. So, no, I don't see what evidence there is to suggest that they were coordinating their action, and first off, Britain and the EU are essentially the same thing.
So, it's simply a coincidence that at the exact same time, on the exact same day, at the exact same morning, at the exact same hour, that Europe, Britain, and China announce an interest rate cut. And I'm the crazy one?
So, I don't even know where to go here. But, I mean, seriously, you think they were just doing this to smack down silver? I mean, seriously? Look, dude. First off, silver only sold off about 60 freaking cents. Look, 61 cents. It wasn't even that big of a sell-off. It's not a big deal. This whole event wasn't a big deal. The only thing it really affected...
Okay, well, it's more than 60 cents, but 60 to 90 cents is 2 to 3%. If you're talking about an equivalent on the Dow, you're talking about a 2, 3, 400 point move. So, yes, that's a significant move.
Was the euro. But look, dude, I was already short the euro because it was at 1.26, and let's go to a nice 6 month here. Look at all these resistance points in this.
So that's enough of listening to this guy. The other point to make about what he says is that he says that you can see on the title that it's buy 26, sell 29. So he's a trader, a paper trader, and he's interested in making some paper profits. I don't know what he does with his paper profits. I would suggest that he buy physical silver, but I have no idea what he's doing with his money or if he's even making any money. But again, he's pointing out that that it's ridiculous that I point out that there's a conspiracy. I don't think it's ridiculous at all when you look at this chart. I think it's pretty clear that there is a conspiracy, and I want to take you to the main topic that I'm going to cover to prove that this is the case, because I want to give you a little bit of historical evidence to show you what they've done in the past. And this is not something that is conspiracy theory. This is actually reported fact. This is, at least today, as you know, when they're doing their nefarious deeds, they don't report them in the press, but just like all these other things, whether it's the Spanish in South America or any number of historical incidents, eventually the truth comes out and they report it like, oh yeah, they did that, but they're all long dead and gone. So this is history, and this is from Wikipedia, and this is the London Gold Pool. And this is the last time that the United States headed up a group of central banks to manipulate the price of precious metals. And let's read a little bit of this so we can see how it's similar to today. The London Gold Pool was the pooling of gold reserves by a group of 8 central banks in the United States and 7 European countries that agreed on the 1st of November 1961 to cooperate in maintaining the Bretton Woods system of fixed-rate convertible currencies and defending a gold price of US $35 per troy ounce by interventions in the London gold market. Okay, so this is a conspiracy. This is this is reported after the fact. Okay, they're not admitting to this when they're doing it. They only admitted to it after it was broken. The central banks coordinated concerted methods of gold sales to balance spikes in the market price of gold as determined by the London Morning Gold Fixing while buying gold on price weakness. Now, people can argue, well, they were trying to keep it in a band. No, they weren't trying to keep it in a band. They were buying it on price weakness so they could have more gold to sell when they needed to suppress it. This was not about keeping it in a band. This was about suppressing the price of gold. The United States provided 50% of the required gold supply for sale. The price controls were successful. Price controls were successful for 6 years when the system became no longer workable because the pegged price of gold was too low. Runs on gold, the British pound, and the US dollar occurred, and France decided to withdraw from the pool. The pool collapsed in March of 1968. The London Gold Pool controls were followed with an effort to suppress the price of gold with a two-tier system of official exchange and open market transactions, but this gold window collapsed in 1971 with the Nixon shock and resulted in the onset of the gold bull market, which saw the price of gold appreciate rapidly to $850 in 1980. So that's a move of 35 to 850. So you're talking a 10, a 20 plus fold move in the price of gold once this conspiracy to suppress the price of gold collapsed. This is all historical fact. Gold price regulation. In 1944, before the conclusion of World War II, delegates from 44 Allied nations gathered in Bretton Woods, New Hampshire to reestablish and regulate international financial systems. The meeting resulted in the founding of the International Monetary Fund. There's the devil incarnate. And the International Bank for Reconstruction and Development, and was followed by other post-war reconstruction efforts, such as establishing the General Agreement on Tariffs and Trade. There's a good guy. The IMF was charged with maintenance of a system of international currency exchange rates, which became known as the Bretton Woods system. Foreign exchange market rates were fixed, but were allowed adjustments when necessary, and currencies were required to be convertible. For this purpose, all currencies had to be backed by either physical gold reserves or currency convertible into gold, and US dollar was recognized as the world's reserve currency as an anchor to the current system. The price of 1 troy ounce of gold was pegged to US $35. This agreement did not affect the independent global or regional markets in which gold was traded as a precious metal commodity. There was still an open gold market. For the Bretton Woods system to remain effective, the fix of the dollar to gold would have to be adjustable, or the free market price of gold would have to be maintained near $35 official foreign exchange price. The larger the gap, known as the gold window, between free market gold price and foreign exchange rate, the more tempting it was for nations to deal with internal economic crises by buying gold at Bretton Woods price and selling it at gold in the gold markets. So you can see the free markets are still operating as they are today and ultimately will break the system of suppression. The Bretton Woods system was challenged by several crises as the economic post-war upswing proceeded. International trade and foreign exchange reserves rose, while the gold supply increased only marginally. In the recessions of the 1950s, the U.S. had to convert vast amounts of gold, and the Bretton Woods system suffered increased breakdowns due to U.S. payment imbalances. After oil import quotas and restrictions on trade outflows were insufficient, by 1960 targeted efforts began to maintain the Bretton Woods system and to enforce U.S. $35 per ounce gold valuation. Late in 1960, amidst U.S. election debates, panic buying of gold led to a surge in price over U.S. $40 per ounce, causing agreements between the U.S. Federal Reserve and the Bank of England. Oh, that's a lot like the guys who are manipulating things today, the U.S. Federal Reserve and the Bank of England, to stabilize the price by allocating for sales substantial gold supplies held by the Bank of England. The United States sought means of ending the drain on its gold reserves. In November 1961, 8 nations agreed on a system of regulating the price of gold and defending the 35 an ounce gold price through measures of targeted selling and buying of gold on world markets. For this purpose, each nation provided a contribution of precious metal into the London Gold Pool, led by the United States, pledging to match all other contributions on a 1-to-1 basis. thus contributing 50% to the pool. By 1965, the pool was increasingly unable to balance the outflow of gold with buybacks, excessive inflation of the U.S. money supply, in part to fund the Vietnam War. Sound familiar? War. Led to the U.S. no longer being able to redeem foreign-held dollars in gold, as the world's gold reserves had not grown in relation, and the payment deficit had grown to U.S. $3 billion. Thus, the London gold pool came under increased pressure of failure, causing France to announce in June 1967 a withdrawal from the agreements and moving large amounts of gold from New York to Paris. So there's your physical. There's your physical breaking the manipulation. The 1967 devaluation of the British currency, followed by another run on gold and an attack on the pound sterling, was one of the final triggers for the collapse of the pooling arrangements, or conspiracy. By spring of 1968, the international financial system was moving toward a crisis more dangerous than any since 1931. The collapse of the gold pool forced an official policy of maintaining a two-tiered market system of stipulating an official exchange standard of US $35 while also allowing open market transactions for the metal. Although the gold pool members refused to trade gold with private persons, the United States pledged to suspend gold sales to governments that trade in the private markets. Sound familiar? This created an open opportunity for some market participants to exploit the gold window by converting currency reserves into gold and selling the metal in the gold markets at higher rates. This unsustainable situation collapsed in 1971 when West Germany was the first to officially abandon the Bretton Woods Accords, resulting in a sudden decline of the dollar. The United States, under President Nixon, unilaterally, without consultation with international leaders, abolished the direct convertibility of the United States dollar into gold, resulting in the Nixon shock. The events of 1971 ignited the onset of a gold bull market, culminating in the price peak of $850 in January of 1980. So, this manipulation resulted in a 20 to 25-fold increase in the price of gold, and silver was even a larger move. So those people who say, such as my critics, that there is not a manipulation don't know history and cannot see the charts in front of their face. It's very clear that there is a gold and silver manipulation. The same actors that were active in the gold pool in the late 1960s are active again in the suppression of the precious metals. And just as they failed in the 1960s, they will fail again. And my guess is that we will get a 20 to 25-fold move in the price of the precious metals, and actually will probably go much higher than that. And we'll talk to you next time.